I am so honored to introduce to you David Gardner. He is a close friend of mine and our entrepreneurial community. I'm not going to waste time reading his resume. We all know him. Successfully exited from a number of startups. He's the CEO and co-founder of Co-Founder Capital. And in that role, he funds and raises money and helps our entrepreneurs. And obviously, he's also an author. So David, we want to thank you for taking time out. I wish I could see you all in person, but it's great to see you virtually. And I'm now going to introduce David Gardner to give our opening keynote for this first annual virtual startup summit conference. Prepare the cabin, all yours.
Thank you, Steve. I appreciate everybody for giving us a part of your day today to talk with you about what's going on and how we can thrive as entrepreneurs in a difficult environment. Let me pull up my my slide deck here, and we'll walk quickly through this. And I believe we're going to have some Q&A here at the end. So if you have questions, you can jot them down there. Hopefully everyone can see my my deck now. So startups innovate and thrive in a challenging economy are what I have sub-dubbed. We're in pretty good shape for the shape that we're in. Let me figure out how to, my slides aren't advancing. Ah, there they go. Okay. So what is the current situation right now? You know, there's two things going on. It's a recession, you know, and a pandemic. And some people may argue that, well, a recession has to be consistently down for several quarters before we can officially call it that. But I think most of the economists that I've listened to lately have said, yeah, this is pretty much the start of a recession. There were the pandemic. There were lots of factors leading to that, but the pandemic definitely jump-started it, and the shutdowns forced rapid changes to make that come on much, much faster than is typical. So the many economists are predicting today that the gross domestic product, GDP, could be down 25 to 30% this year. And that really is, I know we use this word a lot, but that really is unprecedented. It is, no matter what economic forecast or metric you look at, from, you know, unemployment claims, GDP, we have never in the history of the country had this fast of a decline or a fall in all of those major indicators. In fact, it's greater than the Great Depression in the 1930s. Now, that's not to say that this depression will be like the Great Depression of the 1930s. That went down and stayed down for quite a while, and we hope to pull out of this much faster. But we've never had such a rapid, sudden decline of every one of the major economic indicators. It affects almost every part of our life, you know, from how we work, what we eat, how we order groceries, even what we look at on TV. As they're saying, Netflix and streaming video content is going to be severely limited. We're going to be looking at a lot of reruns late this year, but it definitely has touched all of us. So with big market disruptions, create big winners and big losers. And I'll just talk briefly about the times they are changing, and it'll be good in some ways and bad in some ways, but there's also tremendous opportunity here for entrepreneurs. For example, you may think that healthcare is booming right now with all of the corona cases. That's not the case. Most hospital systems do not make money on their inpatient beds. They make money through their outpatient services and their elective surgeries and things like that are completely shut down right now. Now, we may see in time some materials, hospital material companies coming back to the U.S. that have previously moved overseas. We're discovering, you know, wherever something is, you know, very labor intensive to make, it's much cheaper to make it in other countries with lower minimum wages. But things like masks and hospital gowns and things that we've discovered, you know, through living through this, that maybe we need to keep some of those industries here in the U.S. and to take care of emergencies like this. Grocery stores are booming. They've had their biggest quarter in decades as people are overbuying, hoarding, and stocking. But I think this is another example of how this whole pandemic situation and is radically changing industries. We as venture capitalists, we follow different trends and behavior, consumer patterns. One of the things that we've been following, because we have a couple of companies in this space, is the people buying the majority of their groceries from home. And we've been seeing that trend increase 3 or 4% year over year for the last several years. But now, so many people have started buying their groceries from home that I wouldn't be surprised to see a 25, 30% leap in a matter of months in that consumer behavior pattern. And that radically changes the grocery store business. People tend to buy their groceries based on what grocery store is close to them. But when you buy online, it doesn't matter where the store is. And you may find a lot of these grocery stores are their business is radically changing. They can easily be disintermediated by a warehouse in the middle of nowhere and a good online app with a good user experience. Been really disappointed with the user experience associated with these apps. Just being able to add things to the cart or change an order or pickup time. It's just, I think it's going to be rapid acceleration, a lot of opportunities in that food distribution supply chain. Other changes we've all seen what happened to Zoom stock and how it's taken off. One of the big winners, I think, is going to be tele everything, telemedicine, teleworking, teleeducation. I was on a board call the other day. NC State's expanding a lot of its classes, online classes. I've had some pushback from UNC professors that have said that their students, when you get over 100 students, it becomes very unwieldy to try to have an interactive type class. But people have discovered there is a cost to not just a travel cost, but when you go into a hospital setting, hey, there are sick people there. When you go to a group with hundreds or maybe thousands of people, there's always going to be in the back of our minds now this thought that, hey, I am sacrificing some security, being in this group. I could catch something or something could happen. And so I think that it's really going to accelerate the adoption curves around tele everything. One of the losers, I was reading a report this morning on commercial real estate, and it's saying that they expect over the next 2 years, 14% of commercial real estate loans to be defaulted on in the next 2 years. So I think that people driving to the office, one of my CEOs told me last week that he's thinking about shutting down his office altogether. He said, working from home has worked so well for me and my team. Why should I pay a $6,000 office lease? We may just shut that down, continue working from home, and maybe have a co-working conference room or something that we can go to once in a while. But the point I'm making here is that big sudden industry changes, when big companies are slow to adopt to these sudden, unexpected market changes. And that leaves a lot of opportunities for innovative, quick-moving startups. Mark Cuban said last week that he thinks this is the best time in history to be an entrepreneur. I don't know if I go that far, but I do believe that there'll be a lot of great companies and innovation born through mother necessity here. So what has the response been at a federal, a state, and individual company level to the shutdowns? So we're all familiar with what the federal government has done through the CARES Act, the checks that were sent out, the PPP loans. My team at Co-Founders was really well ahead of that and followed that legislation. And the day they started taking applications, all of our companies had guidance, step-by-step processes. We got them all in immediately, and the vast majority of them have gotten PPP loans. I know that there's been a lot of pushback because a lot of deserving companies, the money ran out, and even the second tranche I hear now is running out. And a lot of companies have not gotten funded, whereas some I know of that did not have a single layoff, did not suffer really any economic hardship, got big PPP loans. other hotels and restaurants that have been shut down completely didn't get a penny. And that's profoundly unfair. But, that's the way government often works. You can be fast or you can be efficient. And they erred on the side of trying to be very, very fast. I mean, it was just a checkbox on the application. Were you adversely affected? Yes. I would have loved to have seen some more pre-qualification there on the level that you were affected, and so that money maybe could have been distributed a little more appropriately. The state response and the federal administration did what it did. It kicked the can down to the state governors to decide to make a very unpopular choice. If you continue the shutdown, there's a lot of pushback to that. And if you open up and there are more deaths, there's going to be a lot of blowback and because of that. So it's a bad choice any way you go. So of course the federal government pushed that down to state governors to make unpopular choices. And the social distancing has been working. And we've seen that cases have started falling in places where that's being implemented. And I understand the pushback to that. I see the protest, and my first response is, "What's wrong with you people?" But then I understand. I can't imagine what it's like to live in a small apartment by yourself and just be stuck there week after week after week. And I know people are really frustrated with that. And I, along with everyone else, just ask for patience. We cannot open the economy as much as we want to. This is like pushing a big giant stone wheel uphill. And if you stop pushing too soon, it rolls back down to the bottom, and you have to run down to the bottom of the hill and push it all the way back up to the top again. And so we all want the same thing. We want to be safe, and we also want our economy working again. But opening it too soon could be really bad. I've seen all these arguments about, well, are we willing to trade human life for a better economy? And I don't know how you can put a price on a human life, but I heard one North Carolina economist say last week that that's not really the question. He said, if you take the 63,000 people that have died in the US and their lifetime contribution to GDP, you're talking about, $7-8 trillion. And so if we don't curtail the deaths, we're actually hurting the economy in the long run more than if we open the economy back up immediately. So in some ways, it's both a moral and an economic argument for not opening too early or too quickly. So different companies have also had responses to this, and I've really been encouraged to see some of the things that our companies have been doing. Different industries have been affected in different ways. Some have had almost no reduction in sales, but they are the exceptions. Some of our companies that are dependent on trade shows, for example, for 80-90% of their lead generation, have been profoundly affected. And so they're looking to do what they can do. If you can't drive top line sales, your only other knob there is to raise capital. If you can't raise capital, then your only knob left is cost reduction. And unfortunately, in a startup, our biggest costs are always our people, and that means layoffs. So how is all this affecting our startup community? I've pulled some surveys that have been done over the last couple of weeks, and I can share this with you. This is nationwide, not just here in the Triangle, but I think we're probably pretty reflective of this. Is your company able to operate during the lockdown? And only 4%, I was really encouraged, only 4% said no, they just can't operate at all. And of course, this would be more of your technology type startups. I'm sure if you factored in a lot of restaurants and Main Street businesses, this would be very, very different. But the net here, if you read this report, is that most companies are able to function with little disruption or not as much disruption as they had thought. I read another report that said 12% of early stage companies promoted growth, had actual revenue growth in the last month. So these are all encouraging that we are able to function at least to some degree, even during a lockdown. All right, how many months of runway does your company have? And here you can see the number of months and how many companies said they fell. And it was just over 1,000 responses to this particular survey. So 31% said that they have 1 to 3 months of runway. The gist here is 65% of startup companies have less than 6 months of runways, which what we would consider major red flag danger zone when you have less than 6 months of runway. So this is saying that our companies are undercapitalized, and early stage companies are going to be particularly susceptible to elongations in their sales cycles. And they interviewed some venture capitalists as well. One report had venture capitalists on average saying they're reducing their new deals over the next 12 months. They predicted they would do 30% less new investments. And so instead of investing, in 8 or 9 companies in a year, they would be doing, 5. And so it's or less or 6. So I mean, and that's a function of the venture capitalists needing to reserve capital to protect their current portfolios. The problem with being an investor is once you invest, you then have to protect that investment. And the companies that are venture backed are fortunate. Out of our second fund, we were kind of anticipating a downturn in the market. And so we took the step of every dollar we invested in a company, we set aside $1 to $2 in reserve, so that we'd make sure if we put $1 million in, we had $1 to $2 million in reserve to protect that company. We didn't anticipate a pandemic, but we certainly were anticipating a market downturn. And so when there's less deals being done, it gets harder to get your deal done. And that also pushes down valuations. And that's the graph that you see here from venture capitalists. How do you believe startup valuations will be affected? And this is bad news for the startup community. But and the majority here see 20 to 40% decreases in valuations over the next few years. So by how much did you cut your expenses? And this was a question asked to startup CEOs across the country. And the gist here, if you summarize this, is about a third said none. They didn't cut their expenses at all, which is very encouraging. About a third said they cut their expenses up to 20%. And about a third said that they had to reduce on average 40%, which is a huge, huge disruption to the company. And then termination of full-time employees. You'll see 26% had no terminations. And then you have 36% with 1 to 20% reductions in staff. Then you had a few with much more substantial reduction in staff. So the gist here is 74% of our startups had layoffs at least of some workers. 26% laid off less than a quarter of their workers, and around 25% laid off an average of half of their workforce. So this has hit the startup community particularly hard. One of the things we encouraged our startups is when you do your layoffs, try to do them all at once. We've had a lot of difficult conversations over the last several weeks with our CEOs agonizing over this. And these are hard decisions when you realize that there are entire families dependent on the decision that you make. And we've tried to embolden our management teams and our CEOs, hey, this task falls to you. You have to make the hard call. You have to stay alive, do what needs to be done. And we published a lot of, but I said, make sure you do your layoffs all at once. Nothing's more soul destroying to a startup than having another person laid off every week. Just do your plan, remodel your forecast, do your layoffs, and let everyone know that, hey, we don't foresee any more layoffs. So the guidance that we published really just a few days into the lockdown, we sent a pretty detailed guidance around to all of our companies. And I'll summarize some of the points here, and hopefully this will be helpful to you. One is, of course, and this is always true, but even more so now, you must right size your organization. Optimism is not your friend right now. If we weren't overly optimistic, we wouldn't be entrepreneurs, right? But it can really work against you when you don't do the corrections that you need because you think you're going to pull through. You think things are going to be back to normal, in a few weeks, and you're hoping and praying. But you really need to organize your organization to survive. CEO's first job: do not run out of money. And so the knobs on your console are revenue. You can't drive revenue. You raise money. If you can't raise money, then you've got to adjust your costs. It's the only lever that you have left. So do your plan and pull the trigger on that and lead. Do what you need to do. Lead and stay alive to rehire employees when things are better. Secondly, err on cutting projects rather than human assets. And so you cut costs everywhere. We advise our companies, cut costs everywhere you can before you cut your people. And you can always say you don't get that new release out the door, or you don't get that initiative done. Cut those costs. Those are much easier to restart and catch up. The cost of losing your human assets is really great because you've got to go back and rehire, you've got to recruit, vet, you've got to train those people. It takes them time to come up to speed and be productive. So the last thing you want to lose is your human assets. Unfortunately, they are the biggest cost in a startup, and so often you have no choice. Be decisive. Hope is not a strategy. I've said to our startups, you're trying to figure out what your sales cycle is and what your revenue is going to be looking like. Try to have a couple of plans: a best case, a middle case, and a worst case, and go ahead and set in your mind what are the metrics by this day that are going to tell me which plan I need to be acting on. All right, and it'll help you avoid not making the decisions that need to be made. But go ahead and have those plans, know your metrics, know your deadline date, and be ready to pull that trigger. Be decisive. It's what leadership is. Be transparent with your stakeholders. A lot of CEOs, I don't know why, but they will start sugarcoating stuff, and they'll be telling their teams that things are better than they are, and telling their investors and their boards, look, it is what it is, and we need to be able to trust our leadership to be telling us the good, the bad, and the ugly. So they can't help you if they're not getting honest and getting real numbers and real facts from you. Don't give up on sales and marketing. I think this was actually number one when we sent our guidance around. A lot of our companies are doing pretty darn good in sales. One of our CEOs was telling me he sells to big universities. He said, hey, there are no students on campus. For the first time, leadership actually has time to think about their software infrastructure. And so we're actually getting more people on the phone now than ever before. Other companies, it's going to be much, much harder. But don't give up on sales and marketing. You may be surprised, even though you're not, because budgets are being tightened and they don't know what their budget's going to have, you may not have sales following all the way through the funnel, but still be filling up the top of the funnel. People, if they have time to talk to you now, be talking to them and fill up those prospects. You will need those for when triggers are being pulled again on deals. And then true up your sources of capital. Make sure your best source of capital is going to be your current investors. They have to protect their investments. So whether you have angels in your deal or venture capitalists, be talking to them. Ask your investors, how much money have you set aside to protect this investment? And what would I need to do to pull that money down? Mind your governances. Entrepreneurs often get, in desperate times, they often do desperate and sometimes stupid things. Do not, avoid personally guaranteeing things. Do not go out and take a PPP loan without getting a board consent. Your investors have rights and they need to approve things. And the fastest way for you to get in trouble is doing knee-jerk things and ignoring those governances. Be creative. Be opportunistic. Just like there are a lot of challenges right now, there are also a lot of opportunities. Even though things are tight and you might be tightening your belt, there are some great people coming available right now. You will never regret hiring that top salesperson. Are getting that partnership solidified. They may have time to talk to you now, whereas other times you might get lost in the noise. And the last thing I'll say here is just never count on a government program to bail you out. Just that's all great if it happens, but I've seen a lot of companies get in trouble anticipating something that the government said was going to happen. So when will this be over? Wrapping this up, as early as June, as some people have said, it's possible. I did see a forecast from a big hospital system, and starting in June, they're scheduling all of their outpatient elective stuff. So at least for that one system, they definitely think June is the time period. I don't know. I don't think anyone really knows, whether we get a second wave of this or not. And I'm not sure what open means. We've talked about a phased approach here in North Carolina where different businesses open at different times. So just because we're open doesn't mean it's business as usual. A double dip could be really, really devastating if we open, and then we end up having to go back into full closure again. That could really hurt consumer confidence and buying patterns, worse than if we had just waited a little longer before we opened everything. But most economists that I'm hearing and reading about have said Q2 is predicted to be worse than Q1, but our economic indicators should be improving in Q3. And negatives, less early stage capital, longer sales cycle, lower valuations. But there's a lot of positives here too. Enterprise SaaS-based software companies are pretty recession-proof. You probably started your business, your technology venture, because you thought you had something better, faster, cheaper. Well, guess what? When markets are down and budgets are tight and companies have had to lay off workers, that's when that kind of value really resonates. When they're looking for ROI, demonstrable value, help me work faster, help me save money. So you may discover once the shutdown is over that there's even a greater demand for what you're offering than before. A more available workforce. For the last 2 years, I always ask our companies, what's your number one problem? What's the number one thing we can help you with? And they have consistently said, we can't hire enough people. We can't find the people that we need with the skills we need. And so as layoffs, as big companies are laying off people, I think more and more of available workers are going to be there, and I think you may find that people are more reasonably priced now, in line with their skill sets, and so you'll be able to. It's all about the team and being able to build that team effectively. And of course, less competition. In every business, there are always, you may have the best. You're probably in your business because you think you have the best solution there is. But there's a lot of solutions out there that are okay. They're not as good, but they're out there, and they create noise, and they have ad spin, and they confuse your customers. And so one good thing about a recession is the solutions that aren't very good tend to dwindle away, and that lessens the noise, so that people who really do have the best solutions and technologies tend to thrive. So pulling it all together, my last slide here, I just want to really commend everybody coming together during this time, especially in the startup community. We have such a great startup community and great CEOs. So a few of our companies, and we did not encourage them to do this or tell them to do this. These are just some things that they did completely on their own. Second Nature, one of our companies, you may know as Filter Easy, has over 100 employees, and after they make their filters all day in the manufacturing plants, instead of going home, they start cutting up the filters into face masks and making them by hand and donating them to hospitals and healthcare workers, totally without pay. And giving those away. The CEO of one of our companies, Employus, is working with a group of guys. They put up a website, you may have seen this on local news, where you can donate your CARES check. So again, everybody got a check, and even people who didn't get laid off, who have had no bad economic impact, got a check. And they let you donate that check back to people who did get laid off, who do have some kind of economic emergency. And they've already raised over $100,000, I read earlier this week. A lot of distilleries and breweries have turned their equipment to making hand sanitizer. Some services and products from our companies, I know several of our companies are offering their products and services free right now if you're a healthcare worker. And so great pulling together. Commercial landlords are have been very generous, I think, in foregoing lease payments and letting companies ease off the restriction in the terms of their lease. And so everybody is trying to help everyone through this. And we will get through this, and it will be different. It won't be the same. I think things are always going to be different now. But I do think we're going to get through this. And I think that the great solutions and great teams are always going to get through and thrive. And so I will stop there, and hopefully we have time for a few questions.
Well, David, we want to thank you so much. We're running tight on schedule today. So what we're going to do is David's going to be sticking around. So maybe towards the end, we can have you guys ask questions. And in the meantime, you can email him or email me. I'm actually hosting office hours, my first virtual office hours with David Gardner next Friday. And that might be a good way for you to interact, and that you can all email me if you're listening and you want to get some time with him and some advice. You can do that in a private meeting with him, and I will be coordinating that. David, thank you so much, and we hope you stay with us for a while. Hopefully we'll get back on schedule. Okay.